Hey everybody, it's Ron from Ron's Basement. Thank you. You, only you. Number one, you're not very important, but you're all you think about. You for joining me today. Hey, quick video, just a kind of a random thought I had this morning concerning the price of, you guessed it, gold. But this also, generally applies to silver as well. I'm going to take you into the fourth dimension if you'd like to join me. We're going to look out into the future because the price of gold is forward looking. And I'm going to call BS on a couple things real quickly regarding why I think the price of gold is mispriced right now and how it could enjoy some significant price appreciation in the coming, let's say, year, 2 years, 5 years, 10 years, whatever. Okay, number one, the price of gold, and this is what kind of got me going on this, is I was reading how, like the market is factoring in 3 or 4 rate increases next year. Oh, and that's bearish for gold, right? Right, raising rates, whatever. Well, it's already priced it in, okay? I think it should have, right? All these smart people that participate in the market. Well, the market's already priced in 3 or 4 rate hikes. What I call BS on is number one, can they really raise rates, right? There's a lot of smart people that say, no way, there's no way they're going to be able to raise rates, blah, blah, blah. I'm not going to sit here and say they can't raise rates, but if they have some trouble raising rates, well, then that's going to be good for our old friend gold, right? Should be, anyway. The other thought is if they can raise rates, and I think maybe the only way they will be able to raise rates is if this inflation pressure continues to increase. You know, let's say inflation doubles from here. Well, then, yeah, sure, they can raise rates. They're going to have to do something, right? However, at that point, if inflation continues to word strengthen or get higher, whatever, uh, that's going to make real interest rates even more negative, which again will be bullish for gold. Um, so maybe I'm blind with optimism, but when I think about this whole, like the rate hikes are already priced in, okay? Um, so, when rates, then that's what people say, like when they actually do raise rates, and usually gold goes up, because it's already been priced in that they're going to do it. Does that make sense? That can be a little tough concept to grasp. The second thing I'll call BS on is this whole notion of the strong dollar. We have a strong dollar, and that's bad for gold. Well, even if the dollar is strong based on and it's all measured on a relative basis against the euro and the yen and the yuan, whatever they base the DXY index on, they're all a bunch of crap. It's like comparing, the patients in the intensive care unit, right? Like the health of the patients in the intensive care unit. I mean, none of them are doing good. That's why they're in the ICU, and all of the currencies are in the ICU right now, right? Printing, what, 40% of the dollars in circulation right now have been created in the last year and a half? Are you kidding me? Right? But it's a strong dollar. So strong. Yeah, right. It's like it's like going to a bar and the bartender pours you a drink, right? And then you drink half of it, and your buddy drinks half of his, and then the bartender fills the rest, fills it back up with water, and says, and you guys are comparing your drinks, like, they're diluted. The currencies are being diluted. I won't go down that road any further. The other thing I'll quickly bring up is, compared to, and this is more regard to the miners, compared to 2013, which was the last time that we went into a bear market in gold mining stocks, things are a little different this time. Back then, the GDX, for example, was at 60. Today, it sits around 30. So sentiment for gold miners was much higher back then. The other thing is that the balance sheets, the financial status of all these gold mining stocks was nothing like it is today. They were all loaded up to the gills with debt. They'd made crazy acquisitions. They weren't really generating much cash flow. That's completely different now. Most of these miners have very strong balance sheets, and a lot of them are actually generating significant positive free cash flow. I guess that's it. The other thing different back then, 2013, two things. Number one, the dollar was weaker, which meant that it had a lot more room to strengthen. I think it was at 80, the DXY back then. Now it's at like 96, 97. So back then the dollar had a lot more room to strengthen relative to where we are today. Did I say inflation? Yeah, I don't know. Yeah, back then inflation wasn't an issue, was not an issue, whereas today, obviously, inflation is much more of an issue. I'll shut up. Last video for the weekend. I do appreciate you watching. Again, what I'm kind of looking at and thinking about, you got to realize the price of gold is forward looking. And if things are kind of mispriced now based on faulty future assumptions, that could mean that the price of gold and the price of the associated mining gold and silver stocks could be mispriced right now. As always, don't make any investment decisions based upon what I've shared with you today. Just my opinion, but I do wish you a great day and a great weekend, and we will see you soon. Thanks for watching.